Welcome to the closing beat, everybody. Happy Tuesday. Yeah, it's Tuesday. This is a quick market update show we do to update you on the markets, actually. Brought to you by Jazz Wealth. We're financial advisors at Jazz Wealth. I'm Dustin Tibbetts, by the way. If you have retirement accounts, long-term investment accounts you need help with, you just want someone to help you with it, make sure you know you're invested in the right things, or have someone invest for you because you don't have time, you're not interested, you don't get it, you don't want to get it. Well, that's what we do at Jazz Wealth. We actually have a lot of traders that are customers of ours because they want to be active in their discovery and their trades that they do. And they want someone to manage the long-term accounts so there's no conflict there. And so we thought we'd put together a little class daily here for you guys to update you on the markets. So that's my sales pitch. Off to the left, you see the stock market today mixed, right? And actually was higher at one point, then it was lower, and it was higher again, and then lower again, and then it closed. So if the clock hadn't stopped at 4 o'clock Eastern time, the stock market probably would have just kept wiggling back and forth. Not much to go on today. If you look off here to the left, you've got a white chart. That white chart shows you every 5 minutes what the stock market did, particularly the S&P 500. And there's a red line on there. That red line shows you the previous day's close. So we started positive, then we went negative, then we went nice and positive, drifted back lower for the day and closed down just a touch. Really not a big deal there. Oil, that was a big one today. We'll cover the price of oil as well. We've got a lot of little blurbs and things you can check out. Look at natural gas up here above. Very strong move, just continues to knock out higher and higher prices. We won't really cover that, but it's up there at the top for you. I thought that was interesting. And then, here, normally I save, actually, let's just change it. We're going to do something a little unique today. I'm going to take that away. We're going to go to the charts. Normally we stick with the graphics, try to be fancy, but here's the thing. Yesterday, we sort of geeked out. We look at your investments here at Jazz, all of our customers, every day, right? No joke. We don't play golf. I don't have time for golf. We don't have hobbies or anything. We're just here looking at stocks. We're looking at your portfolios and trying to improve. And so one of the things we did is we looked at the stock market and we said, yesterday, everything was so bad, but yet we kept seeing how there was a lot of good. Here's the thing. There are 11 sectors in the S&P 500. If you were to take those big sectors and break them down into industries, is actually what they call it, you actually can funnel this down to 67 different industries. And if you're ever, geeking out on this stuff, that's what you come up with. 11 sectors, we all know them: utility, real estate, now it's communication services, technology. You get where we're going here. All these 11. 67 industries, I can't possibly name them all. But what happens is we watch the 67 industries, every one of them, and then you look at the stocks inside of them. So if you're really geeking out and want to put a bunch of screens everywhere and see how things are going, what you would have noticed yesterday, and just a touch today actually, was that out of the 67 industries, you had just as many of them hitting new 52-week highs as you did 52-week lows. When we put them all together, we had this thing going on. Huge spread in the market. Now, if you're not familiar with that, 52-week highs, that just means they hit their highest price over the last 52 weeks, right? So it's not saying for the year they hit new highs. It's saying going back all the way to November of last year. Then down here, you had the equal amount of industries hitting 52-week lows. What's the deal? If the market is split that much, then shouldn't we just tread water, right? Well, here's the thing. If you want to really get sort of nuts about this, one of the best performing industries on the way up is called the food and staples retail. So it's food and staples retail. Now you kind of know, that was the case. We've been talking about consumer staples products, but you can actually dig deeper into that. Consumer staples retail, one of the better performers, and that's like Walmart, Costco, CVS. If you look at the stocks in this industry, that's what you would find. So that kind of explains it. The other one was power and renewable energy. I'm not going to write it all. You get what I'm saying. Power and renewable energy, also at 52-week highs. Companies like NRG, AES, if you happen to look up things like that, these guys are the stocks inside of that industry. They were at 52-week highs. So you go, okay, if we've got a group up here and a group down here, why was the market lower? Well, in reality, here's the problem. These two categories and all the ones that were up here made up like that much of the overall S&P. In fact, the food and staples industry is less than 2%. And the power and renewable energy space is, I can't remember actually now, it's a fraction of a percent. Don't hold me to that number, but it is minuscule. It is tiny. It has very little impact on the overall performance of the market. So, top-down analysis, you had a lot of sectors. Every one of them pretty much red yesterday. I believe utilities and everything else. But when you boil down the industries, you would actually see a different story. And for a brief moment, you would have thought, wait a minute, the market may be better off or worse off than it seems, right? Depending on how full your glass is. But when you look deeper at the ones at 52-week highs, you really have sort of the no-name stocks there doing their thing. So that's all I have for you there. I wanted to just point that out because take your eyes and look away from pot stocks, look away from tech stocks, zoom into the market and go, what are you doing? What's really going on here, market? Should I be concerned? Should I be excited? And that's what you spotted. So long story, I didn't mean to take your time there. Hopefully you didn't leave me if you're not interested in that. Let me know if you are interested in something like that because that's all I do. I just like looking at things like that as deep as possible. I want to see everything that's going on and maybe have some things to share coming up. We'll see how things go. Anyways, you see the stock market there. The Dow closed lower by 100. The S&P closed lower by 4 on the day. And the Nasdaq is basically flat. I mean, I know it shows positive. It was a fraction of a percent in the positive today. So not really a big deal there. Oil, you're going to see oil and this headline everywhere now. Oil, the price of oil has now broken records that you don't want the records to break, right? So oil you can see on, oh, you can't see it on the screen. There you go. Here's the price of oil on the screen. That I tweeted earlier today. Would you catch this falling knife? Put a little knife next to it and everything. I was pretty proud of my graphics there. But so oil down 12 days in a row, today being the worst out of all of them. Oil has never been down 12 days in a row. So what does that tell you? Are people excited about oil or nervous about oil? It has never fallen 12 days in a row. Many people did not think it would be under the 58 mark. I think I mentioned last week, I think 58 would be a good little support. Everyone was using 58 as support. As soon as it went under there, it's a bunch of stop losses. It's a bunch of people throwing in the towel, admitting defeat and not wanting to participate anymore. That is a part of trading, and they right there, you see it pick up. Anyway, so anything energy related, if you happen to have energy in your portfolio or participating in anything like that, energy, explorers, oil service companies, you can look through all of them. They're all pushing or making new lows. And, you just got to understand the weakness there. I mean, that's the worst day for oil since 2015. I think December 2015, if I'm correct there. Either way, not a good thing. Now, you look at the market and you say, okay, if the market was pretty nasty yesterday, you can understand volatility or fear being higher. If the market was lower today, could we then assume that fear or volatility would still be higher? And the answer is not really, right? It was basically flat, right? So volatility actually finished flat on a little bit lower on the day, letting you know that there's not really a lot of fear there, at least in today's movement. Go over to a couple other things. Semiconductors. You don't like to see this. Here's what happened. Semiconductors started off nice and strong, recovering nearly everything that it had lost yesterday. If you're one of our customers and you haven't seen the candlesticks class, send me an email. Let me know you want the 3 candlesticks classes that we did to sort of illustrate this. But basically what you see today is the semiconductors started off strong and then the sellers won. The sellers came back in. They beat this thing down. It did close higher by 1.25%, but that's not what everybody's going to remember from today. So just sort of interesting there. Banks also a little bit higher on the day, just playing a little catch up. A lot of things were just playing a little catch up today. So, not too bad. If we look at the like the semiconductors, you got AMD up 3%. Hey, Micron, by the way, if you're one of our customers, we talked about this in our class. Isn't it almost doing like it could technically do exactly what we were talking about, just ahead of schedule there. So we'll keep an eye on that. We'll mention that on Thursday, by the way, when we do our class for you guys. Amazon today. You're going to see this in the headlines. They picked New York City, Long Island, I guess, and they picked Northern Virginia as spots for their 2 headquarters to split. They also opened up a place in Nashville, or will be opening a place in Nashville. I think it's sort of sad, to be honest with you. The stock was basically flat on the day. They're going to put 25,000 jobs in New York City, 25,000 jobs in Northern Virginia. I think they're partnering with Virginia Tech also to sort of build skilled, qualified workers there. That just tells you they shopped everywhere They looked everywhere for the, everybody was like, oh, they want the biggest subsidy. It all boiled down to, we just can't find qualified tech workers anywhere else but there and where they're currently at. And I don't know, I think that's kind of sad. This shows kind of the experienced tech worker in this space, or in the United States, not very good. Anyways, Goldman Sachs, you probably saw the news there. The Malaysian Prime Minister is pissed. He wants fees back for one of the funds that Goldman Sachs participated in. There may be some problems there. It's not really going to take Goldman Sachs down if they have to really fight this thing out or give some of the money back. But you should know that the stock is currently at lows. It made new lows today, down another 0.5% today, and they're down by 20% on the year. So if you like a discount on a big financial name, I'm not saying to buy it, but whoa, what a discount. Okay, Boeing lost another 2% today. There was a crash in Indonesia last month. They're starting to look into it. Wall Street Journal says that Boeing withheld information about the stall warning system for the 737 MAX 7 and 9, I believe. Did I write it down? The 737 MAX 8 and 9 jets. And hey, it could be one of the reasons that plane crashed out in Indonesia. I haven't really followed the story, but that's basically what put Boeing back into this base here. Remember, Boeing's a recent breakout. It broke out very shortly and then returned right back into this choppy base. Investors don't like that. That means the next time it moves higher with a lot of caution. So you should probably behave the same. Michael Kors basically flatlining here. There was a McGuire actually started coverage. They call it initiating coverage. So if you ever see on TV that an analyst firm initiates coverage, it means they weren't covering it before. They put a team together or one big guy. They've done their research and now they have their first upgrade or downgrade for the stock. They usually don't say that from the start. What it means is there's very little track record for them to go on to tell how good they are at this yet, but that they want to cover Michael Kors. Well, anyways, they started off with initiating coverage and they put a $75 price target on it. Would you look at the chart and see where $75 is? All the way up here at the high. So basically they're saying 50, almost 60% that this stock is going to rally in the next 12 months. You know what really happened here, by the way? Think about it. This company wants you to follow their recommendations. They hope that they gain business from that in the form of everything that they offer. They need to make a splash. They need to get their name out there that they are covering this stock. Thus, they pick a stock they think is going to bounce. They will put a ridiculous price target on it, and then over time they will reduce that price target. But for now, it gets media attention that they will be covering the stock. Honestly, that's what I think happened. Best Buy, a little bit lower today. They were downgraded. Bank of America, Merrill Lynch cut their target to $70. Not bad, but they were at 92. Basically, they said they've looked into this, and they've said that any growth, all the excitement, everything that Best Buy can do is basically done for now, and the stock needs to just take a break. Their words, not mine. NVIDIA higher by 5.5% today. Really cool company, by the way. I know we've talked a lot of geeky stuff today, whatever, but there's a really cool company called Susquehanna. And if you ever get a chance to look up Susquehanna, so cool what they do. You want to talk about geekdom. Oh man, in another life, I'm going to work for them or the Chicago Trading Group. Anyways, so Susquehanna upgraded NVIDIA. They said that the current issues that they're having as far as growth and everything and the products that they just sort of stopped, that'll all pass in a quarter or two, and then that longer term opportunity here for NVIDIA still exists. GE, I tweeted about this one earlier. The stock was higher by 7.75%. They're planning to raise $4 billion by the end of the year by selling Baker Hughes, which is just, come on. Here's a great, let me go to the chart. Here's a great example of trying to time a stock. So General Electric basically just admitted that they can't time the stock market because they want to sell this thing, I believe they said by the end of the year. It's trading at its lowest price. It's at $23.45. So they were hoping that there would be more value here, that they could sell it at a higher price. It's just not working out, so they're taking their loss and they're moving on. So I tweeted about that one. Pretty sizable little pop there for them. There's a lot going on there, guys. There's a lot going on. I'm not so sure that this Larry Culp guy understands the credit markets too much based on what he's trying to do. But they're trying to raise money. They're doing everything they think is correct, and investors rewarded them for that today. So we'll see. Also, hey, Tilray reported earnings. Down a little bit. I believe it's down a little bit. Can I see, is this one actually plugged in at the moment? Yeah, trading lower. Down here around 107. Actually pretty small move considering. Revenue up 83%. Yeah, that's exciting, right? So man, they're going to take off, right? What's 83% of next to nothing? It's $10 million. So their revenue was $10 million in the last 3 months. Just remember, highly overpriced vehicle. If you're investing in Tilray, if you're excited by what you see in the pot stock world, you are paying for operational excellence. You are paying for a company that is so overvalued, people are pricing in that they are already successful. Nothing wrong with that. If you want to invest in that, you need the company to perform to that level and then some for you to see a decent profit. I still think it's overpriced. I mean, that's it. Okay, that's all I have for you today. Pretty straightforward. I might have missed Home Depot's earnings. Did they report today? I thought they reported. Maybe they already reported and I missed it, but that's all I have for that one there. Can we have a class on sectors and ETFs associated with it? Wouldn't you know, we've already scheduled one. General Electric started recovering. Well, today's a good start to it, but remember, you're picking a bottom, so it's going to be, it's very rare that you buy something and it makes a V bottom, meaning it's falling, 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 immediate reversal, and it starts going higher. There's a lot of repair that has to happen there, so keep that in mind. How do you feel about hedging a portfolio by always having 5 or 10% in gold? I would hedge with other products. I would not use gold personally unless you were planning on using an ETF or futures and futures options in the mix. Gold as its hedge is just, you can't justify it long term. You can time it, and you can certainly have good moments in time, but long term I would look for different hedges myself. You feel kind of dumb asking this, but what does it mean when one company upgrades a stock? Well, that's an analyst company. So there are companies out there, well, there are divisions of companies out there that hire analysts. And to be honest with you guys, if you want to be an analyst and you happen to know something about biotech stocks, that is the most superior growth area right now. Speaking about not being able to find employees, the industry can't find biotech sector analysts. They are starting salaries over 7 figures just to be an analyst. Like, what? So anyways, an analyst is hired by companies, say Goldman Sachs, JP Morgan, whatever it is, to analyze a group of stocks or just a handful of stocks. They basically go to the company. Let's take, I'm thinking of JCPenney for some reason. They would say, okay, I'm covering JCPenney. I then go to JCPenney once a quarter, I believe. They have an analyst day where the CEO talks to all the analysts. They have other people come in and sort of share the good, the bad, and the ugly. The analyst then takes that with everything they know. They go crunch some numbers, and they say, we think the stock should be trading around here based on everything we know. And so sometimes when they think things are good, they will upgrade a stock. When they think something bad's on the horizon or they've learned of new data that's adversely going to affect the company, they will try to figure out what stock price that means. They will make their bet. The good news is every analyst's history is tracked. So a lot of times when I say an analyst upgraded a stock, I'll say that they have got the last 292 out of 315 correct and they've averaged a certain profit. So you can track which analysts are actually better than others. It's sort of a dying industry overall, but it still grabs headlines, so it's fun to talk about. Daniel, time to buy oil futures? There is not a chance in you know what that I'm going to answer that question. That's like, I can't say, first of all, when it's time to buy or sell something. If I were going to trade oil and thought that this were a discount, that is the product I would use. However, I would not suggest that most people do it that way unless you're very comfortable with it. So that's my best PC SEC regulated answer. Should young investors even diversify all growth? Growth. Dividend stocks, you can get some great growth dividend stocks if you catch them early. I think our dividend portfolio actually is one of the better dividend growth funds. So that doesn't mean that it like takes off and does crazy, but our goal is not just dividends. We like to see a little growth out of that too, so that's how we adjust. Cool, yep. Seems like a long-term downward direction of the market. Could it turn around by the end of the year? Absolutely, Alan. There's actually a stat that shows that midterm sort of cycle that says anytime in the next 2 weeks here, the market would turn course and not finish the year higher, but would be heading higher into the end of the year. It's there's a company that focuses on, I can't think of the name, I promise, but They did a study basically to see after the midterms, the markets are all messy and sloppy and everything. But towards the end of November, they turned course and started heading higher. I don't have any stats on that. I just simply am interested in things like that. I should brush up on that more before I even mention something. So that's the best I can do today. Wouldn't we be better off picking the best performing stocks of your favorite ETF rather than the ETF itself? Wouldn't we be better picking the best performing stocks of your... Well, that would assume that the best performing stocks in that ETF continued to be the best performing stocks. For example, if last month tech stocks were the best performing stocks inside of an ETF, you pick the tech stocks, you lose. Right? It didn't work. So careful there. By the way, utility stocks for the last 6 months are the best performing sector overall, second only to, healthcare comes in second place. So think about that. Everybody's over here looking at this. Meanwhile, utilities, right, and healthcare are just doing their thing, man. That's pretty interesting. Why is it difficult to find consumer staples ETF with no tobacco component? You may have to look at alternative ETFs. We're going to do a class on that for our customers, but you may have to find an alternative ETF that uses some sort of derivative to participate in consumer staples minus tobacco, but so that they can still make up the difference. There's a lot of those sort of politically correct, or what do they call them, socially conscious ETFs that in order to justify what they do, for example, let's say it's the tobacco one. In order to participate in that sector, if you strip out tobacco, all of a sudden you have an underperforming ETF. Nobody wants to invest in an underperforming ETF. Even those that are against tobacco will say, well, crap, I'm not going to invest over here and lose money versus invest over here and just against my good conscience. So what these people have done is they've said, okay, what if we strip out tobacco and then we use derivatives to try to make up the difference? That makes it an alternative investment. It makes it more speculative, and so it makes it a little more difficult to find because it's not really set out for the mainstream public. There's a lot of regulations there where people get in trouble, so you have to find them. That's kind of how it works. Or just search alternative ETFs if you like, or a list of alternative ETFs. You'll find it. Dig in there. Do a little homework, Winston. Jesse loves the stats, geeking out. Where can we find more? Tomorrow. We'll be back here at 5 o'clock. We'll do it all over again. We'll make sure to include a few geeky stats there. By the way, thinking about expanding this show as well. I want to do even more in the way of the fun that we have here. Anyways, if I helped you in some way, hit the subscribe button. That's what we're here for, basically. I want to speak at conferences next year in front of all the financial advisors and let them know that they're going about it in a different way, when in reality, customers, viewers, subscribers are interested in seeing certain things. And so I'd like to just educate the industry and see if we can get more. Honestly, I want more competition. I want more people to come on and start doing what it is that I do somewhere, and we can all kind of work together. Might be a bad idea, but that's my plan anyway. So hit the subscribe button. I really appreciate it. We'll be back tomorrow with the Doe Show for Wednesday, and then we'll do this show again at the end of the day. Have a great Tuesday.
Why should you choose Jazz Wealth as your retirement or long-term investing service? Our portfolios are managed by us, not some faceless mutual fund manager. Our private classes will teach you everything about investing and getting your dough straight. Best of all, our fiduciary standard means your best interest comes before ours.